Good afternoon, everyone. All very welcome to today's US market open. Apologies, we've had a little bit of a mic issue there, of which I think seems to be working much better. So for those joining along, and of course for those who are active in our community as well, very welcome to today's US market open for Wednesday, the 20th of August. So first things first, obviously looking at the data prints today. We've obviously had higher than expected CPI in the UK following our preview last night, with the year-on-year, month-on-month data beating expectations. So, of course, that put a little bit of upside pressure on the sterling this morning, on the pound, and we did see that initial upbeat rally into the 8 o'clock open. Now, we did mention yesterday this value area around the 135, 135.10 into 135.20 would become a very interesting level for potential secondary move of sellers. And coincidentally, following last night's kind of preview, that's exactly what happened. So we had that initial impulse on the data print, on the news, and very quickly by mid-morning, early afternoon, we actually saw that pound roll lower again back to that value area. So there was two kind of nuggets of kind of price structure this morning. The initial break on the news, on the data, followed by that secondary rejection off of yesterday's value area. Now, at the same time, it's quite interesting, obviously, when you also look at the FTSE. The FTSE play this morning was actually quite subdued into that kind of 7 o'clock print, with very little of an equity market kind of reaction. And it was only as the pound started to move lower through the latter end of this morning, when we had that rejection off of 135, did we actually start to see the FTSE aggressively move. And of course, we've had that very clear aggressive break on the FTSE 100 into 9200, and from there we've actually progressed to new all-time highs again on the session, but on the actual index moving into that 9250, 9260, 70 level, depending obviously on the exchange you're using, whether it's CFDs or futures. So overall, you'd actually say that the pound, despite that heavy print today on the CPI data, the equity markets doing incredibly well this morning, while simultaneously we're actually seeing that reaction back to the value area. So that's going to be an interesting narrative. We talked about it yesterday. Really looking to see, while the price structure did indicate, we've talked about this move lower back into those high 133s, low 134s, with that idea of 135 potentially being a selling point. And that narrative, despite the PPI print today, has been a fairly formidable idea. So from my perspective, it'll be interesting to see whether we continue this decline lower, taking out value lows on the session. And if so, we should be looking for that further progression to the downside on the back of that. So that's a very interesting narrative to look at, but also important to understand how news affects the markets, both from a short-term perspective, but also in the broader macro trend structure in terms of what we've also discussed last night as well. Now, in addition to that, we've also had, obviously, the RBNZ, as expected last night, cutting rates by 25 basis points from 3.25 down to 3%, while simultaneously the PBOC in China has also maintained rates at 3% also. So from those perspective, from an interest rate perspective, all of those data prints coming in line. So tonight, of course, we do have the FOMC minutes, but from today's perspective, it's really all about evaluating price action structure. Now, we did also say today it's going to be a less heavy day for data, relevant to really tomorrow, and of course, obviously Friday as well, with the exception, obviously, of those European prints this morning. So a lot of the European data prints are done, confirmed, price structure is flowing naturally now. And of course, as I said, we have a very busy day tomorrow, and we talked about how tomorrow was going to be the crucial day of the week for trading activity. Now, as we migrate out of the European session, of course, we've looked at the FTSE, it's rallying. We've looked at the cable price, it's obviously got a short-term bump and is moving lower. When we also look at the European side of things, quite an interesting move. Of course, we've seen overnight the euro dollar did slip as well, off of that back of that initial break in the DXY. So our fulcrum point last night was really looking to see, would the DXY break through structure and progress higher? And that's exactly what's happened. The DXY has broken structure, taken out those cluster short-term highs, creating that initial move against the impulse, holding up, and certainly looks like to be moving higher. So this is the type of structure you'd like to see happen, and really now it's looking to see, can this dollar continue to reign supreme, reign control, break back above the 98.40s, and incrementally follow these visual arrows, these visual aids that we've drawn out to see this progress higher into those high 98s, low 99s, and of course delving up to that higher time frame perspective, looking to see if it can actually create a new broader higher time frame short-term high into that 101 handle, or potentially maybe a little bit lower. So that'll be the big one to look out for over the next day or two. Particularly, as I said, we have a very, very data-heavy day tomorrow. Now, the other side of the equation is really the VIX. The VIX, of course, we had that move lower on Monday. We followed it through with that impulse yesterday. The VIX, of course, is still remaining quite bid, catching a lot of short-term residual strength just underneath that 16 print. And for me, that's going to be interesting today because, of course, if we continue to take out the short-term structural highs following, obviously, the first and second breaks, well, then, of course, that's going to help with that dollar strengthening, and obviously that continual decline in the S&Ps for what we've kind of talked about over the last week or so. So S&Ps is flowing lower. It has reacted off of the value area into today's open. But of course, we'll talk about the indices in a moment. So the DXY and VIX, very, very interesting to watch from an FX perspective. Really looking at it on a higher time frame. And of course, on the higher time frame yourself, you'll actually see that from last night's close, the DXY obviously holding up. But likewise, on the daily open today on the VIX, at 230, we have also seen the VIX gap slightly higher. So you can kind of see that marginal increase from 15.6 to around about 15.8. So it'll be interesting to see if we can get above that 16 print. And as I said, if we get above that 16 print, you would be looking for that continuation in risk orientation out of those risky assets. For example, the equity markets, for example, potentially cryptos as well, and looking for that continuation in flight to safety. So that is something to continue to watch out for as we progress into the better part of today's open. Now, we're just 3 minutes into the open, so we obviously have to digest the initial volume of the markets, followed by the subsequent move on the value area, which is really first 30 minutes of the open into 3 p.m., which is in 27 minutes. And then, of course, obviously progressing through the course of that, so 3 p.m. being UK-based time frame. So that's kind of where we are at in terms of the DXY and the VIX. As we move back to traditional equity markets, we talked about this kind of segmented move yesterday. We talked about how the S&Ps had lagged and really kind of started to follow through with selling into the latter end of yesterday's session, but after 3 o'clock, whereas obviously the Nasdaq simultaneously had that initial break. Now, on the session today, the equity markets has continued to remain on the downside. This 23,300 was met pre-markets this morning, so we talked about that last week. We talked about it last night as the markets was moving lower. We got there overnight, and really now it's a case of, are these markets going to actually break through it? And yes, we have that value area around that 23.2 to 23,300 level, which obviously was going to be of pivotal interest today and tomorrow. But we could obviously see these markets break down even further should the DXY and should the VIX continue to progress on the upside. So we just have to look at the risk rated denominations of these assets and really kind of evaluating sentiment as the session develops accordingly. So that obviously goes for today, but it also subsequently comes for tomorrow as well. So that is really, really pivotal in my opinion. Yes, we have seen a little bit of a dead cat bounce recovery from Asia session lows, just under 64s on CFDs, so would be about 64.25 on futures or 64.20 on futures. But also suddenly as well, you'll see yourselves, if you look at the short-term price action, a little bit of selling pressure coming back in, but markets over the last probably 2 to 3 hours of trading pre-markets into the open has remained fairly flat and consolidated following that aggressive move lower yesterday. So that's obviously of pivotal importance as we move into the open to see what happens at this Nasdaq level around that 23.3 handle and subsequently around that 6,400 level, which we've been kind of trading around into today's US market open. You can kind of see for yourself on the S&Ps, and you can also see kind of similar reaction on the Nasdaq as well over the last number of hours, really from about 10 more prominently from about 8 o'clock this morning, but more vividly between 10, 11 and into half 1 into half 2 for the US Open. Okay, now the other side of the equation is, as we look at Wall Street, Dow Jones, this is quite an interesting one because, of course, we talked about this yellow area of liquidity. That was obviously last Wednesday, last Thursday. That was holding as benchmark lows initially on Tuesday before we had that spike on the data. Monday, should I say, and then, of course, into today as well, Tuesday and Wednesday. We have seen that level continue to hold. But of course, we've tried to obviously break out. We talked about it. We had that aggressive wick spike yesterday. It faded, it came back down, and then of course pre-market this morning we've had another bounce and hold at 44.8. So basically markets is in a conducive state of consolidation because of course we are holding these value area lows around that 44.8 handle, but also simultaneously on a structure wise becoming a lot more condensed, as every time we see to get a little bit of a rally in the short term, like for example yesterday, it very quickly rolled over. So you're looking to see if there is any sort of clear correlation, any clear break in the Dow, in the Wall Street to really break out of this crocodile kind of formation we've been talking about in the higher time frames, where we've had lower lows, but we've also had simultaneous higher highs as well. And it's very conducive to aggressive volatility. So do keep an eye on that one, as I said, through the course of the session. Now, of course, on the lower time frames, you'll actually evaluate that over the course of the last 3 days or so, really since Monday, the value area has been pretty tight around that 44.9. So we've had that almost 3 identical value areas. Now it might pivot today a little bit, given the aggressive nature of the move above the value area over the last probably 15 to 20 minutes or so, a little bit into the open, and then on the 6 or 7 minutes after the open, we've seen a little bit of a spike. But we've seen similar moves yesterday, right? We saw that initial break on the open, and then by 3 o'clock, the markets were folding back on itself. So just be careful that this might be a fool. You might get your apex again that we kind of talk about, where we get those initial spikes and then all of a sudden markets breaks back down again. So just be cautious, and already we're starting to see VIX as well on that. So let's see how that one develops. As I said, through the course of the session, we want to see these are at pivotal levels now. The S&P's at 6,400. That's a pivotal level. The NASDAQ at 23.3 approximately. It's at a pivotal level. And Dow above 44.8. I think for me is at a pivotal level as well. I'm really looking to see whether those price action zones, whether it be today or tomorrow, actually starts to negate and progressively move lower. But as I said, that's going to be contingent on the risk profile really kicking on, really improving. Yes, we've seen that DXY get a pullback or retest following that breakout yesterday. But let's see what develops on the DXY through the course of the session, and simultaneously at the same time looking to see if there's any adverse effects on the volatility side of things, should I say, above that 16 print. And of course 16, anything above 16 for me is really going to see that VIX move higher. So I've basically set an alert there. It's something that I'm going to look at through the course of the session to see whether the VIX does break 16s. If it does, that's going to be kind of the confluence to potentially see these equity markets go lower. And if it's a case it doesn't and migrates back into those low teens, let's say 14.5 to 15, well, that's going to create or serve as a short-term bottom for the likes of the S&Ps, for the likes of the NAS. And the likelihood is that this Dow becomes a lot more conducive to consolidation up here, as I said, between 44.8 and continued consolidation between probably 44.8 and 45.2, 45.3 subject highs, into where it would then probably start to create a more consolidated like structure in this type of region here. All right, so let's see what happens on the three of those. In terms of the German DAX, this was quite an interesting one as well. We talked about how the German DAX was folding back on itself, yes, and we kind of drew this kind of short-term trendline liquidity is kind of holding up at that. And of course, we have seen the volume break down pre-markets. This morning, we had that V-shaped move lower into the open, followed by that correctional move back up. Now, when we bring back in the value areas for a second and just dissect or break that away, you can actually see how this morning, structurally speaking, on the open, on the DAX, we broke down, taking out Monday's lows and taking out obviously subsequently yesterday's lows. So basically today on the DAX, we did formulate new lows on the week, and then almost immediately returned back to yesterday's value area, of which that was nearly our high of the session. So you can see very, very clearly V-shaped move following the lows. That's a liquidity sweep followed by reaction or rejection of value area. And since then, those markets still remain a little bit more geared to the downside. So it'll be interesting to see if we start to take out, let's say, 24,275, really kind of trying to threaten these initial lows that was formulated around the open this morning in Germany, well then of course that brings the idea that we might see a little bit more selling through. So let's see what happens here. We're obviously looking for, if you're looking for selling in equity markets or risk denominated assets, you're really looking for VIX to go higher. In simple terms, you're looking for the DXY to go higher, and that then becomes the catalyst or the narrative to potentially see this segmented move in the likes of the S&Ps, which is threatening 6,400 now, the Nasdaq, which is trying to give way, and of course the German DAX, which is just about holding on as well. So let's see what happens there. And you'll even see as well on a simultaneously move, the Dow has come back in to really grab the liquidity sweep yesterday on that kind of apex as well. So it too has folded back on itself. So equity markets today, as we speak, on the back foot, looks like they're just about hanging in there, but that could very much expel into further weakness into 3 p.m. So that for me is the key. Simple terms, let's see if the dollar and the VIX picks up. VIX is really trying to have a go now at 16. As I said, that's going to be the confluence there on that. And then, of course, on the crypto side of things, just before we end off, obviously BTC got to new lows last night, of which we talked about. We kind of formulated bottoms around about the 112,700 handle. Ethereum at the same time finally got the gap fill really late last night, around about 12:30, 1 a.m. this morning. We saw the Ethereum CME gap fill basically from the kind of 8th of August actually filled. So BTC gap CME fill has been completed, as too is the ETH. So of course, if we are to see, as I said, volatility skewed to the upside, of course you'd expect more downside pressure, revision of these lows, and potential further declines in the likes of BTC and of course ETH as well. So let's see what happens there. CFD side of things, it's a little bit more nuanced because of course it's 7-day week charting. There's no weekend gaps. But of course, when you look at the future side of things, you can kind of see that there is residual liquidity areas, particularly, as I said, when you look at those massive breakaways in the likes of the Ethereum asset as well. So let's see how that one goes. But as I said, if you're looking at accumulating or getting into cryptos, you're probably better off leaving it for a week or two, because there does look to be a little bit more downside pressure coming through. It's just a case of waiting to kind of formulate some bottoms. And obviously, that's just my own opinion. It'll be up to you to kind of reaffirm that within your own analysis as well, just to make sure that the correlations are proved. And as I said, in the same time, let's see what happens on the volatility side of things with these markets today. All right, so let's see how things go. As I said, 6,400s in the S&Ps. Let's see what happens there at 3 o'clock. The Nasdaq, it's slightly below 2,300s, 23.3s, should I say. But we're kind of retesting those lows of the session, so we obviously want to see that become a little bit more affirmed. VIX above 16 is kind of the confluence for that. If you're trading in Europe, obviously looking for the DAX to break through, you're obviously looking for a little bit more bearish sentiment. If that doesn't happen, well, of course, you're kind of fading that kind of 24,275 low and V-shaped bottom that we've subsequently seen this morning as well. All right, that's pretty much it for me. As I said, for the rest of the session today, we do obviously have FOMC minutes tonight at 7 o'clock. We've got a few central bank speakers on the wires with Bostic and Waller. And then, of course, tomorrow, another heavy day with European PMIs in the morning, followed up with US data in the afternoon at 1:30. So it's really going to be an interesting session tomorrow to ascertain volatility. But as I said, some of these instruments for correlation will be effective in allowing you to both manage your risk, but also simultaneously be positioned on the right side of the markets, so to speak. All right. Other than that, guys, have a lovely day today. I hope everything goes well. Of course, factor in the risk and the volatility side of things as always. And of course, trade safe. Thank you.